Right, hello everybody. Thank you very much for joining us for our Wednesday Professional Beauty webinar. So today's webinar is about how beauty business owners can manage their cash flow both during and after lockdown. Our presenters today, you can see with me, are Ria-Jaine Lincoln, who runs Ria-Jaine Business Accounting, which is a specialist accountant for the salon market. And we've also got Sam Fairbairn from Float, which is an app specifically designed to help businesses to manage their cash flow. So Ria-Jaine and Sam are going to be talking us through how to manage cash flow during this difficult time, how to access the loans available, and how to make sure that they see you through. So Ria-Jaine and Sam, thanks for joining us.
Thanks, Eve. Thanks for having us today. And thanks, Sam, for coming on as well at short notice. really appreciate it. Yeah, so basically we'd just love to go through why cash flow is so important as well. I have got a bit of a story, so I'm just going to start off with that. So cash flow for me, I do have a bit of a personal attachment with it. Some people may know my story from when I lived in the refuge before. And it was only when I was studying for accountancy and learned the cash flow exercise, I used that to sort of help myself get back to normality. When I'd moved into a new flat. I had to buy a cooker for £20 and a small bed for £5, and I had a budget of about £20 a week and a son to manage. So with that cash flow, and I used a spreadsheet back then, I literally planned out every single bit of income and expense in my personal budget to help me manage. So that's why I've got this personal attachment. That was about 11-12 years ago. And then when sort of life improved, I then used the cash flow forecast tool to have the best year of my life. So I was a single parent with 2 children, and I used the same cash flow planning exercise to, get a holiday to New York for New Year's Eve. I done festivals, concerts, 2-week holiday with the children. And the whole point of me, expressing about this story today is just to let you guys know why I'm so passionate about the cash flow forecasting tools, because I know that they work both in my business and with the personal examples that I've given. So we've got Sam on board today, who's going to help us go through the Float cash flow software tool as well. So it's just going to give you an insight into what you can use the tool for and how you can use that during this difficult time during COVID-19 and for when you go back to normal as well. So it's not just about survival, it's about the future of the business and how things are going to progress in the future. Over to you, Sam.
Yeah, thank you so much, Eve, for the introduction, and thank you so much, Ria, for the kind words there. Sincerely appreciate the opportunity to be part of this today. We share that enthusiasm for cash flow forecasting. That's why we sort of built Float, and that's why we're trying to help as many businesses as we can right now through a really challenging period. And we do genuinely believe that cash flow forecasting can be one of those tools or one of those exercises that can get you through this and can help ensure or help you understand what, always give you that visibility into the future, so that hopefully there's not going to be another global pandemic, but should there be another situation that would have a similar impact on your business, that you'd be able to see that well enough in advance to take some precautionary measures, so you can begin to not necessarily, plan for everything, because it's impossible to predict the future, but at least put some safeguards in to help you and to help your business really continue. Wonderful. So let's dive into the presentation. So if I click on presentation, and there we go. Perfect. Wonderful. So, as Eve said, the topic of today's presentation is really about how beauty business owners can manage cash flow before and after lockdown. And we had a wonderful introduction there from Ria on her own personal story. And I remember the first time, Ria, you said that to me, and that was incredibly inspiring to hear, because I think it demonstrates really the power and the value of cash flow forecasting as an activity. So it really does have the power to change lives and change your business as well. So hopefully today we'll make that a little bit more real as we talk through the various reasons why cash flow forecasting is important and the steps that can help you do so as well. Anything else you wanted to mention, Ria, just before we dive in?
No, that's fine. We can go on with the slides.
Perfect. So just to give everyone a rough outline of what we're going to talk about today, I just wanted to contextualise what Ria and I are hearing are the sort of the main challenges at the moment in the industry. And I think from yourself, Ria, I imagine you're hearing these on a daily basis at the moment. And then once we've sort of contextualised what the challenges are, we'll move into think about how or what advice we'd like to give to help you begin to tackle these challenges. And then part of that being obviously what the government support is available as well. There has been the coronavirus business interruption loan schemes that have been announced, but then obviously recently the bounce back loans as well. So starting to consider how they would be able to help, and then finally how Float and Ria-Jaine could help you as well together navigating all of these as well. So without further ado, I think moving into sort of contextualizing the challenges. So Ria-Jaine and I had a conversation last week, and we're sort of talking through, what we're both hearing or what specifically you're hearing, Ria, on this topic. And I think these were the questions that tend to sort of came out of that, or what you're hearing the most. Firstly, should I take the loan? So, with the coronavirus business interruption loan schemes and then the bounce back loans, it can be a real challenge to work out. First, am I eligible? And then secondly, should I take one? And you mentioned, Ria, that there's also quite a fair bit of sort of worry, anxiety, stress, because there's a general sort of thinking that, taking on debt could be a potentially negative thing. Is that right?
Yeah, I think so. There is a lot of anxiety about taking on debt, and I think that's something that quite a lot of people can relate to. But I do think with the bounce back loan that's just been released, the terms are quite favourable and it's a bit more of an attractive option. So I do think it is something that business owners should be considering. And with the use of a cash flow tool, they can see the impact that taking the loan will have on their business. There's the 12-month deferral period on the new bounce back loan. And the government are covering the interest in the first year. So if you get the loan out and you can manage those repayments within 12 months, it's not going to cost you. You don't need to really be that worried about that because the terms are really, really good. And the interest is capped at 2.5% after that. So I do think before completely writing off the option of looking for funding and, seeking loans and other things, it is really important to practice a cash flow exercise just to see how it fits in with you now and then how it will fit in the future. So what is the business going to look like having to commit to those repayments? Will you be able to pay the loan early to avoid some of the interest? Just some of those questions as well. Another challenge that I've noticed, or it's feedback that I've received. So when I speak about cash flow forecasting, as soon as I say cash flow, a lot of people I've spoken to have said, I don't have any cash flow. What is the point in doing a cash flow forecast? When actually, I think that's an even more important reason to do the forecast, so you can see how you can get out of that position and how long things are going to be below zero or whatever baseline you've got that you don't want to go below in your business. So I'm just hoping after today's webinar, it just maybe changes the mindset a little bit around the cash flow exercise and about how people go about getting the funding, and having that into the business as well. And to maybe not look at it as a debt, but it's an investment. What we're going through right now hasn't happened before. And like you said earlier, Sam, as well, the pandemic might not happen again, but ill health or accidents, or you might need to move town, anything can happen in life. Life happens. That will mean you may have to shut down for a few weeks or change things. So this is where this webinar is going to really help as well.
Exactly. I think you're absolutely bang on there. I think the perspective is something that we want to try and get across, is really, answering these questions like, should I take the loan? How much should I borrow? What are the implications, as Ria mentioned earlier on, about the interest rates and so on. I think all of these can be helped and can be answered with cash flow forecasting as the kind of core activity or regular activity. And that's just sort of scratching the surface with the power of cash flow forecasting. We're using these as an example because it's obviously a current issue at the moment with those loans being announced. But I think the key thing we want to get across is not only can it help with navigating the loan landscape and whether you should take one or how much to borrow and what applications are, but can help with a number of issues that exist in your business and helping you sort of navigate what's best to do to resolve them.
Yeah.
Sorry, Priya.
I think that answers. I can see one of the questions have come up. I have one of the first loans before the bounce back loan came out. Should I pay the first loan back and take out the bounce back instead? But again, I wouldn't want to say yes or no just, straight away. What I would say is do a cash flow forecast, see what the impact is on the different interest rates, and having that 12-month repayment deferral period as well. And then you can weigh up both options and see what is best for you and your situation. And that will depend on the amount and how your business, what the plans are going to be in the future and things as well, and other debt that you've got in the business. So it is something that you need to look at on a whole, and hopefully by the end of this webinar, we'll give you the tools to be able to do that as well.
That's right. Yeah, I think that's a really good point there from Kerry. We'll look back to that later in the presentation because I think that would be good to focus in on. But I think one thing we want to sort of raise just at the start is that answering these questions about the loan, but also answering about any business kind of call or choice that you're considering making is really, really difficult if you're just sort of taking for lack of a better term, a finger in the air approach. So not necessarily thinking about the cash moving in and out of your business, more so, I guess, out at the moment with things being shut. But I think we want to try and drill home the key point here is please do take a systematic and a sort of I guess that's the word, systematic approach to your cash flow forecast. Don't just make kind of calls and choices on a whim. Is generally do think about that, and that's what a cash flow forecast really moves you away from, is that finger in the air sort of key choices, or sorry, that whole framework for making a key decision is moving away from that. So just want to make that point. Please do, if you can, start to think about the steps, and that's really what we want to get into right now is sort of how to tackle these challenges. So if you are in a position where you're maybe doing a bit of finger in the air work and you want to get a more robust form of understanding what's happening, then what are the steps to doing so, and when these separate them out individually, just to make that a little bit easier. So looking at that in the context of the business, the loans that are available at the moment, I think a really, really important thing to consider is first and foremost is to work out who you need to pay first. So that sort of answering questions like how much money will be available in 3 weeks, 3 weeks or 3 months to the day, when is the business cash balance going to drop below zero, or any other level that you set, I remember you mentioning in your article, Ria. I think the answers to these questions will be instrumental in first helping you answer whether or not you should take the loan. And I think to answer the questions, how much money will be available in the business in 3 weeks or 3 months to the day, when is the business cash balance going to drop below zero or any level that you set, you need to work out who you need to pay first. So, Ria, I remember a conversation the other day, and you mentioned sort of the majority of businesses in the health and beauty sector have little to no income right now, and that is obviously a challenge. So, talking more about the cash out side, what sort of cash out payments would you recommend people prioritise right now? You mentioned insurance the other day. Is that one, or what are the others as well?
I think insurance is a really important one, especially if you have a premises that is unoccupied at the moment, because you're still going to need the cover. So things like insurance are really important to keep ticking over. It may be a little bit different if you're a home-based business, but I would keep the insurance going, because claims can be made at any point. You don't want to end that insurance now, and then someone from, say, just before lockdown makes a claim and you're not covered because you've ended that. And then that could bring even more problems down the line if you have to pay damages and things like that. I do think as well with rent, so if you are renting a space or renting a salon, I understand that not all landlords are offering holiday payments at this moment in time. So that will be a priority bill for you, because you need to have the premises when you go back. But I think using the cash flow tool to work out how much you can afford right now realistically will really help you know what to speak to your landlord about and how to negotiate payment holidays. Or if you can't make a payment this month, but you've done your cash flow and you know when the furlough payments come in, or the business rates come in, or the grant comes in, then you can make a payment. If you've seen that in your cash flow forecast, at least you can contact your landlord and you can let them know, look, this is the situation. I've worked my figures out and I know on the 15th of June, you can really get that precise when you're doing these forecasts. You could say I can pay X, Y, and Z. So I think it's just about really looking at, like say, who you need to pay first, and then working with what you've got, essentially. When can you pay them and what can you do about it? And the first thing is, have the conversation, go through all your creditors. So go for a bank statement, all those direct debits, cut out some of the things that you maybe don't need, some of the old subscriptions that you're not using. And then the things that you do still need and that are your priority bills, then work on a plan at how you're going to negotiate payment holidays. Because if the income's not there and you've got a payment that was due, say, the 1st of May, and you haven't got the funds to do it, at least you'll have the confidence in knowing your figures so that you can negotiate ready for when these loans and things come in. I think some people are getting their furlough payments and stuff through already, but it will be scattered because different application times as well.
Yeah, absolutely. I completely agree with you on that. I think really important you mentioned about Ria, about the payment holidays. I think that's something that I've heard not only just in the health and beauty industry, but in other industries as well. To relate an example that I heard from a coffee shop in Cardiff, they had a coffee shop right in the middle of Cardiff. They had a quite a significant rent bill that was continuing at the moment, and what the coffee shop owner was able to do was build a cash flow forecast, and he actually showed the cash flow forecast to the landlord and said, listen, I am struggling here, I can't afford to pay the rent, and as you can see, here's the evidence with the cash flow forecast. What can you do to help? So answering or making that an open question there. So don't be afraid to show a specific segment or part of your cash flow forecast to your landlord, because that's really what enables you to do it. Removes any sort of question mark or concern on the landlord's part that you can or can't pay. The facts will be there, the objective data will be there to say, look, listen, this is the calculations I've ran, and these I can't afford to pay. So please do, if you can, help. What can you do to help? So that's really, again, another power of something like a cash flow forecast.
Yeah, I also think as well on this point, work out who you need to pay first. In particular, sole traders who maybe aren't on payroll and they're not getting a wage, they'll be suffering because not only do they have to pay for the business bills and rent and things, but their household income's also going to have taken a massive hit as well. So with any cash flow planning, I would always think about that wage that you need to draw down for yourself, or those living costs as well. So that should be factored into some of the loan applications and things as well, because especially as a sole trader, you can't go on furlough. Do you know what I mean? So you do have the option to keep marketing. So if you are still spending time on the business, whether it's just trying to keep momentum on Facebook and things like that, you should really try and build in that little pocket of cash for yourself as well. So to think about that when you're doing all your plannings, and maybe think about that with this point as well, about work out who you need to pay first, because if universal credit claims aren't coming through and things like that, and you do have the loan that's come through to help cover the business costs, then it is something that I think everyone should be thinking about as well. So don't forget about yourselves in this and what you need to do to help yourself.
Really, really important point there, Ria. Thank you so much for making that. Completely agree. I think, as much as there are working out who you need to pay first to keep the business going, you think your business can't, and often, especially in the sole trader instance, can't exist without yourself. So you are one of those people that you need to pay first. So considering that in amongst everything is super important.
Yeah, there is one word of caution as sole traders though with that. So the money that goes to you will be seen as income, essentially. So it's not going to be a business expense. So say if you have the £10,000 business rates grant and you draw out, I don't know, £500 of that for yourself because you're really, really struggling, that won't qualify as allowable expenditure. So that will impact some of the tax on that. But as I say, with a cash flow forecast, you can work out all the different scenarios and see exactly how it's going to impact you and what's the best thing to do.
Perfect. So once you've sort of thought about, who you need to pay first, Ria touched on it as well, is sort of thinking about, okay, who once I've sort of got my list of creditors that I know that I need to pay, and that could of course be yourself as well, is working out what's the surplus, who can I potentially either push forward or pay at a later date, or who can I sort of what can I cut out entirely. And I think that's I think before taking the loan, it's important to consider what can you do to help your cash flow dropping too low. Because then that ultimately, if you're able to do that, then taking the, when you feel more confident in the amount and what you're taking on with the loan, if you know that you've done, or you're confident you've done everything you can in your business to make some adjustments, so that the loan itself is perfectly customized to you and your situation. So things like, I think, the question I have, I guess, Ria, to help people work this out would be sort of what payments are you seeing or hearing people having more flexibility around, and kind of could fall into that category of, I can make a change here. I think you mentioned the other day booking software potentially being one.
Some booking softwares are changing some of their prices. Also with the tax and VAT, so the tax deferrals, meaning, or sole traders that will have a July payment on account, so those tax savings will be available to use, for the immediate time and use whilst you're struggling, but then you will have to think about paying that at a later date. So that's probably the quickest way to make some changes with your cash flow if you do have those savings aside. But otherwise, it is just speaking to your software providers or whoever, if you've got a cleaner for your salon, you're not going to be using the cleaner anymore. So maybe that's one of the things that you can make a change on as well. So yeah, I think, Sam, whilst we're on this slide, sorry to kind of change the topic slightly, but can you just talk me through what we're looking at as well on here, just so the viewers can see? Because I'm just in particular that little bit going into the red.
Absolutely.
Zaggy line.
Of course. So this is taken a direct screenshot from Flow, and really what that is that is just a sort of a breakdown of the day-to-day picture of what your cash flow forecast. So the way that this, how we represent the cash flow forecast in Flow, you can see the line here. You can see where the problem areas are by obviously the red point here, and then you can specifically zoom in on where you dip into the red and see exactly what's causing that. So is that is that a significant payment going out at the moment? Do we really need to actually make that payment? That could be, as you mentioned, that could be a VAT payment that we have scheduled coming up. And we know now if we have the flexibility around being able to pay that at a later date, we can quite easily correct that red area, or correct that dip in the cash flow forecast by pushing that out, or agreeing with the HMRC to push that cash payment out, and then ultimately helping improving our cash flow forecast as a result as well. So that's really the value of being able to see in advance of what your issues may be, is that I think it's a lot harder to make changes to improve your cash flow forecast if you literally realize on the same day or in the moment where you are in a trough or are in a the red area, for lack of a better term. But if you're able to see that red area sort of quite far in advance, which is the whole point of a cash flow forecast, is giving you that visibility, then you can take steps well in advance of you reaching that point to make sure that you never actually go into the red. And use the example there, as you mentioned, Ria, about pushing the VAT or pushing PAYE, corporation tax, all those sort of tax liabilities out into the future.
Yeah, no, that's good. Thank you. I just wanted to kind of put a visual to what I was saying. So like that little red bit there would essentially be the tax payment coming due, say in July. Right. But then if you were to push that back, so in the centre of the grid there, that red bit could be pushed further back by a few months, or you can adjust the cash flow so that you're making up for that payment gradually.
Absolutely right.
So it doesn't go into the red at all. So
totally right.
Yeah. Okay. Thank you.
Wonderful. So moving into the next session, we've talked about working out who you need to pay first, and then working out those payments or those areas of the business where you can make some changes and there is some flexibility around payments. I think it is connected to what we were talking about, but it's really about, okay, I know there are certain areas of the business where I can make changes. When's the best time to do that? Because I think that's the the two sort of can be the unforgotten component of a cash flow forecast is as much about how much cash is coming in and moving out of the business, but also when that's happening too. And I think one thing that you mentioned to me last week, Ria, and I think you made a point earlier on about it, is that you're hearing things from people saying, I'm not getting any income at the moment, so I don't need a cash flow forecast. But yes, you don't have income coming in at the moment, but you need to understand when you're going to be making payments out, because it can be very, very easy without that visibility that a cash flow forecast enables to make some decisions about who to pay and when to pay that overextend yourself, so you're actually paying way more out than what you know or you actually have in the bank or cash available in the business. So just wondering, you mentioned about VAT and sort of corporation tax, PAYE, things like that. Is there anything else that you would sort of recommend, or that you've heard from people that they've made a decision about to change the date when they pay something?
So some landlords have offered payment holidays. So they've either changed the amount, so reduced it to nil, or 50% each month, or they've just changed the payment date completely and given like a 3-month holiday period, and then they'll add on a bit for 3 to 6 months after. So there's all different variances, but it is mostly with rent. So it ranges between no support to like a change in date or a change in amount, because some landlords are getting the business rates grant. So yeah, that is one thing. And yeah, the next few things would have been, so the VAT deferrals, PAYE deferrals I've negotiated for my clients, and the July payment on account that's coming up. That's a big one for sole traders, and because we're at the end of the tax year as well, it's an opportunity to review that July payment on account and then see how much that is actually going to be when we need to pay it in January. So they're the key ones that we're changing at the moment.
Wonderful. So I've actually just seen a point from Lisa there in the question. She said, I think suppliers are flexible if you provide solutions, i.e. when you can pay rather than I can't pay. And having a cash flow forecast really helps. So I think that connects back to a point we made earlier, is that, with the suppliers and the rent and the landlords, things like that, it's not making the assumption that, they're not going to allow me any flexibility at all, can potentially be a misplaced assumption. It's just about giving them the confidence, basically translating the information or transposing the information that you know about your own business to them as well. And once they see that data there, once they see the fact that you are in a difficult position, you are finding things challenging and committing to making payments, they will be able. They're human as well. They will look to help as best they can. So I think it's super, super important. Really great point that Lisa makes there. So thank you for that, Lisa.
Yeah, I think also as well, it's really good to be able to demonstrate when things are going to improve. So even though we don't know when we're coming out of lockdown, we can play with different scenarios. So what's it going to look like if we went back early June, end of July, all these different months? So you can present those to your suppliers and creditors as well and say, the situation is temporary. And even if we go back in 6 months or 2 to 3 months or however long it's going to be, because let's face it, we don't know at the moment, at least you can demonstrate the potential and the potential that you have got to pay back in the future. It is just temporary at the moment, and it is affecting everyone. So people will understand, but it's just about showing them in a way that it makes it clear for them to understand that you're not that anyone's using the situation to cancel bills, but just to demonstrate there is a real need, to start to ask for the payment holiday. And then I think that would really, really help with negotiations and things like that.
Absolutely. Yeah. So it's not just, as you mentioned there, it's not just about, can I make the payments, or showing to sort of suppliers or landlords that can I make the payment right now, but look, acknowledging that I may find it difficult to make the payment right now or make the full payment at least right now, but these are the scenarios that I'm considering, and hopefully one of these will transpire. Because your landlord and supplier have as much knowledge about what's going to happen as you will. So showing or demonstrating you have the capacity, and that's really, I think, how the banks are approaching the loan schemes as well. Is that if you're able to demonstrate that you will be, or that you're considering what possibly could happen when the lockdown lifts, then the chances of you getting the loan are a lot higher. And I think it works the same way for landlords and suppliers. They're not too different in that respect. It's just showing that you have the capacity potentially to be able to meet those obligations that you're asking for a little bit more leniency on just in the moment.
Yeah.
And
I've
that
just seen Kerry's comment there. She's working on 10 different scenarios right now.
I can totally. I think that's not. I mean, as much as I imagine that, I think would be quite a challenge. I think that's totally the sort of the intention there is great there, Kerry. I think the fact that you're considering all these different scenarios are fantastic, because I think that was one of the things that sort of struck me when I spoke to someone. I was speaking to different people, and I was asking them, these two people one were doing cash flow forecast before, and one weren't doing cash flow forecast before the COVID-19. And I think the question, or what became apparent about the person that was doing cash flow forecast before, was that I asked them, what was your approach, and they said, we considered all these scenarios. And when the news first announced of back in January, when the virus was starting to unfold around the world, they started to look at, okay, what would happen if some of our business dropped off? And they weren't coming in from a place of being pessimistic and believing that was going to happen, but it was, I guess, them being more realistic and saying, okay, if this happens, we want to be prepared. And that's really the why, or the real element of scenario analysis, or that scenario component of cash flow forecasting is, no one's saying that you're pessimistic. It's not about being pessimistic. It's just about considering, I want to be prepared for a situation should it arise or should it unfold in this way. And I think that is a really important part of scenario analysis, and it also is for the loans as well. As you mentioned at the start, Ria, there are going to be different. There can be, depending on the amount that you take, and the interest rates and so on, which you would speak to better than I will. But that's why the scenarios is so important to consider as well. Is that if I take 50,000 versus 100,000, what's the implications of those two things? How long am I going to be paying it off for? What's the interest rate for those, and how will that affect my business long term? So, I guess what loan applications, or sorry, the loan amount and implications is an important scenario to consider. But what other scenarios are you hearing at the moment, Ria, that you feel are important to consider as you as we move through these weeks and months, potentially out of lockdown or potentially continuing?
Yeah, I think there's the government support, so the furlough payments and business rates grants as well. But another key thing that I'm thinking of with my clients, and something that all business owners will be thinking about, is when they return back to work after lockdown, how long is it going to take to get back up to the same level they were at before? In an ideal world, we're all desperate to get our hair and lashes and things done, but we don't know what restrictions and things are going to be in place. Or we don't know what customer behaviour is going to be like about people coming back into the public and things as well. So there's the issue with the income coming in, how slow that may creep up. In addition to that, there's concerns around PPE as well, so the cost of that. And I think that's something that a cash flow forecast would be really useful for, because we're seeing the prices go up on gloves and masks and things like that. But it is something that I have seen beauty businesses thinking about already. So, they're starting to make the purchases, or they're at least looking around for those things. So I think the PPE and maybe the change in the sales revenue are two quite important scenarios as well at the moment.
Amazing stuff. Yeah, thank you for that, Ria. I think you hit the nail on the head there. I think, considering no one really knows when we're going to get out of lockdown, but also no one really knows whether or not lockdown's announced and people go straight back to doing things as normal. I think there will be generally a gradual, people will be tentative in the way they go back to their regular routines. So that could obviously have an effect on income, but on the supply side, that could be a challenge as well. So considering all these things, and that's really what cash flow forecasting enables you to do, is as Kerry mentioned earlier, those scenarios are a really, really important part of that, because you've got to work out, with everything I know right now, what's realistically going to happen to my business over the next 3 weeks, months, and so on. But then what could happen as well. And arguably, that's what could happen is made easier if you think about, okay, what can happen or what is going to happen too. So we've run through, the 4 steps today, which is work out who you need to pay first, work out what areas of your business you can make changes in once you've worked out who you need to pay, and then when's best to make those changes. And then considering, in the context of the loans, the amount and implications, but it's more sort of on scenario analysis and planning for those scenarios. So all of this can feel potentially like what your minds might be thinking through is, okay, how do I even do this? And one thing I just wanted to say is that what might be defaulting, what you all might be defaulting to is the method of cash flow forecasting at the moment is something along the lines of this, or something looking similar to this here. So this, I can obviously judge by Ria's reaction there that this is the most typical way of doing cash flow forecasting, and I can understand why. Because people, spreadsheets are highly customizable. They are, it's what people are familiar with, and as a rudimentary approach, it can be quite a good way to get set up. But quite quickly, as things move forward, as you start to actually get digging into the detail of a cash flow forecast, spreadsheets become less and less, I guess, less and less easy to use and building that, because you have to manually update a lot. So you have to manually update any changes you're making to, as we mentioned before, about who you need to pay, and then when you're going to pay them, and if you got a payment holiday, what that's going to look like. So there's a lot of manual input into the different months or weeks, but then also what that means is there's also scope for human error as well. And I think that's one of the key things when it comes to a cash flow forecast. As important as they are, one of the key things about them is they need to be accurate. They need to accurately reflect what's happening in real life. And, we all are human, so we all have that, we all are prone to error. And I think with the manual input, that can be a real challenge. And I remember the first time we met each other, Ria, you sort of touched on your challenges with spreadsheets before. So, and given that you've got a lot of experience in cash flow forecasting, could you speak a little bit about some of the challenges you've experienced with potentially running through the steps we have, but using a spreadsheet to do so?
Yeah, I think I do have a bit of an attachment to my good old spreadsheet. And I do actually have a template like this that I have available for download for clients and things. So it is something that I have used for many, many years. But it's very mechanical, and having to update the data almost every day or every week or every month, because things change. And it just even seeing the spreadsheet now just gets me a bit like, oh, it's too much. Because now I've obviously found better ways to do it. But with the current situation, before you just do the cash flow forecast, you'd think about maybe what's your ideal level of sales that you want, what's your budget you're going to have on outgoings and things, and how much you want to take back for yourself. And that was kind of as far as it went with cash flow planning. But what's happened lately with obviously COVID-19 and the pandemic, it's highlighted the importance of scenario planning, and not just when you want to invest in a building, or if you're looking for a mortgage and things like that, but just proactively looking at your cash flow and monitoring it, and allowing it to change with you as you and your business change every day and week, without having to sit down and go through rows after rows after rows on the spreadsheet. But I do think if the spreadsheet is working for something very similar, like setting your sales target levels and things, then I still have a spreadsheet that I check against my cash flow tool. But with scenario planning and changes and things like that, I think it is best to look at some of the other options that are you can quickly adapt with you and your situation.
Well, that's it. Yeah, I think spreadsheets as a starting point can be really useful to get down, I guess, the basics of cash forecasting, understanding the concepts of it. But as you move to, as you mentioned, scenario planning, and certainly, as Kerry mentioned earlier, if she's got 10 different scenarios right now, I imagine that might be, if she's running them in a spreadsheet, that could be a challenge. So as you naturally gravitate to more towards through the steps that we mentioned, you will start to see spreadsheets become more and more of an issue. And what we really don't want you guys to do is to invest all your time in preparing that cash flow forecast. We want you guys to invest your time in, improving your business, helping your business get through this. That's the whole point of this webinar, is to, help beauty business owners manage their cash flow before and after lockdown, and ultimately be there to service your clients after lockdown as well, and really champion them. And I think if you're investing the time, all the time in your spreadsheet at the moment, then it can be a bit of a challenge to redistribute that time back into your business, and how you're going to really take the opportunity when things do open back up. So what I would say is, sorry, Ria, just if you want to add any final point to that.
I was going to say as well, I think the points that we've gone over through the webinar, even just thinking about those points will put you like miles ahead than the spreadsheet task. Do you know what I mean? Just thinking about when things need to be paid, who you can, speak to and negotiate payments with, what your priorities are and things like that. So it's just about asking yourself those questions constantly, rather than maybe getting into a false sense of security by plugging the figures into a spreadsheet and then that's it, job done. Whereas you always have to be thinking about these things every day, every month, as your business evolves. And in the current situation, with the situation evolving, this time last week we didn't really know about the bounce back loan that was going to transform people's lives. some applications have been paid out within 7 hours on the bounce back loan. So that's another tweak in the cash flow forecast, in your way of thinking and how you're planning. So there's a lot of change happening, and I think it's going to continue, and it will probably keep going at the pace it's going. The changes, whether it's PPE, I know Kerry's left a comment on there to say she's bought her PPE, getting ready, for opening and things like that. Some people are buying screens. There's so much that people are thinking about, but it's changing, and it's changing quite quickly. So this is where the spreadsheet can maybe hinder you a little bit and hold you back, because if these changes are coming every day, you're going to have to go in and manually update all those rows and formulas and things as well. And then you don't want to lose the original spreadsheet, so you create copies or extra rows, and it starts to get really, really complicated. So I just think keep it really simple. Think about the steps that we've mentioned during the webinar, and then you're halfway there, because you're already changing your mindset and you're always thinking about what's the best time to do what and when.
That's it, yeah, and this is sort of really what I wanted to round off with. Is we've mentioned quite a fair bit today, and we've mentioned the steps, but take each step individually. Don't try and feel like you have to do them all at once. You're new to cash flow forecasting, and if we can, take those step by step. Don't, work out who you need to pay first. Once you're comfortable with that, then think about where you can make changes. But don't jump way ahead to the scenario analysis until you've done that work. Give yourself some time to breathe. Give yourself some time to think, and almost in a way create a checklist, very much like the slide demonstrates here. Like, tick. I've done I've worked out who I need to pay. I've worked out who, where I can make changes, and then now I know what's next. So taking a staggered approach to it is far, far better than just thinking, boom, cash flow forecasting, because I think that you can quite easily become overwhelmed, like with anything really, if you just go full diving in the deep end straight away. So take a step-by-step approach, and hopefully that will help. So I think that's the end of the presentation now, but of course we do have a point for questions coming through, so please do keep them coming, or keep them coming through at the moment. I think there's one here from Kerry. How far ahead should I cash flow forecast? It's really tricky at the moment to work ahead. I guess I should just keep to the basics. So I've got some thoughts on that, but I think I'd love to get your thoughts first on that, Ria, given that you're working with clients at the moment on exactly that.
Yeah, at the moment, we normally, before COVID-19, I would work on 3 months and 12 months. But at the moment,
just going to switch us back to this view for the question so people can see you properly, but do carry on.
Yeah, no, that's fine. But I think at the moment I've been doing forecasts for the month that we're in. So if I was going to do the forecast today, I'd do for May, just so that we can see how things are in the short term, and then probably look at scenarios over the next 3 to 6 months, just because we just don't know what's happening. But I think the more scenarios we look at, the more confidence that we can give ourselves, or I can give my clients, that whatever happens, if X, Y, or Z happens, we've worked through this in the cash flow. We know what you need to do, and we know that you're going to get through it, and this is what it's going to look like. So I think for the moment, we definitely need the 3 months, but you do need to be thinking about the immediate short term, because there are changes every week. So that should be your key forecast. But when it comes to your loans and things, if you've got a loan for 6 years, you can, do your 12 months or your first 2 years, so you can see what that looks like. Once the 12-month interest-free period has changed. So it does depend on your circumstance as well and what you're trying to review. But when it comes to COVID-19, I would say focus on the month we're in, and then do a 3 and 6 month. You should always have an annual kind of plan anyway, like a target for sales and budgets and things. But for the active scenarios, don't get too distracted spending all your time looking at scenarios that you're not seeing what's actually happening, or you've missed like an update or a new loan's been announced or something. But yeah, for the month that you're in, and then I'll do 3 and 6 months.
Yep, I think that's a far better answer than I could ever hope to give to that question, Ria. So completely agree with everything that's said there. I think as much as it is important to consider what can happen, what will happen if lockdown ends here, and then the way between people coming back to normality. Despite the fact that it's important, I think you're absolutely right. There are still initiatives being launched by the government. There are still new information coming out on a daily basis. So the immediate term, i.e. the end of the month, potentially moving into the next 4 weeks, whatever that may be, is really, really important, because you can't get there. It doesn't make sense to think about, you won't be able to capitalize on anything that happens after lockdown if you're not able to keep or make sure that you're confident that you're going to be able to come out of that. So I think that's the key thing, is working on the immediate term, understanding that. Even if you can understand that and focusing on that, that's far, far better than focusing just on the scenarios 3 to 6 months in advance, because you kind of need to, in a way, to use an analogy, sort of run before you need to walk before you could run there. So yeah, completely agree.
I think with the loans coming in as well, you really need to think about the maximum term, the maximum period of time that loan's going to cover you. So it is wise to look at the cash flow forecast for that period as well, and the business rate grants and things, because I have seen there are a lot of people that have been successful in the bounce back loans, which is brilliant. But it did make me wonder, have they done the cash flow planning, because we only found out a week ago about these loans. So what sort of planning or decision went behind getting that loan amount, and what's going to happen with those funds now they're in your bank account? How can you make the most of that and make it work for you after this current situation? And for that side of things, I would focus on the loan covering those absolute priority bills, and then keeping a safety net, because we just don't know when we're going to go back, and PPE and things like that as well. So I just think building a safety net, if you are getting the funding, is really, really important at the minute as well.
Totally.
Fantastic. I know you have been through quite a lot of the questions that we've had pop up in here, but we have also had quite a few over on Facebook, because we're live streaming this to Facebook too. So if it's all right, I'll just share a couple from there.
Of course.
We've got one here from Dawn Reed, who said, would it be useful maybe to take last year's accounts and project for the coming year based on that, and then another projection after the 12-month interest-free loan?
It's really hard to say, because we don't know what it's going to look like when we go back. It'd be good to use last year's figures as a base, like as an average, to work out what the average monthly income would usually be. But then we need to consider that along with whatever the government guidelines are. So if they say you're only allowed 2 clients in at a time because they have to be 2 meters apart, when normally you'd have 5 in, that's going to impact your turnover. So I wouldn't worry too much about trying to use last year to work out what we're doing now, because it's changing so much. I'd have that as a base, but be prepared that's not going to be reliable if your whole way of working is going to change, and if PPE is going to increase costs and things like that as well. So it's really about listening to the guidelines. I know there's been announcements, with Ireland and things like that, about how the beauty industry is going to be going back, and maybe trying to think about scenarios based on the evidence and the information that we've got now, and using last year's figures as a benchmark. So that's what would happen if you went back, if things were exactly the same. And then if you have, say, 5 staff in that month and you have to go back with 2 staff, you'd work out the split based on that. I hope that answers. Have you got anything on that, Sam?
Yeah, I would say the same. I think, it's ultimately, obviously, we're in a completely different spot than what we would expect, what we were last year and what we are now. So I think potentially taking last year's figures could even be a scenario that you look at. What if we go back to normality later in the that's what I'd look at. I wouldn't necessarily say that would be realistic. That's more scenario analysis as opposed to realistic. I think what's more realistic is what you mentioned there, Ria, about sort of potentially. I know that's generally the case that 2 people allowed in at once or 2 meters distance and fitting that in. I was speaking to a coffee shop owner again, and she said, they normally have about 10 people or 15 people max in their coffee shop, but with the new guidelines with 2 meters, they can literally fit 2 people in their coffee shop. So there's a debate over whether or not they open up that coffee shop again at all. So these are the sort of things to consider. Is that I know, again, we're going through so much uncertainty, but it's quite it's more realistic to say that that'll happen than what it would be. Then we just go right the way back to what it was like last year, i.e. everyone could fit in with not 2 meters apart back in your salon. So keep that minute more as a scenario, but I guess take a more realistic approach to what could happen. It's better to be safe than sorry in this sort of situation. So that would be my advice on that one.
Okay.
Excellent, thank you. There's another question over on Facebook, which is what about licensing fees? Surely they should be reduced as we can't work. I'm a home-based salon. So I'm thinking this is fees for kind of license to trade.
Yeah, I can't comment on licenses and things like that. You'd have to speak to the license provider and just to see, if they will negotiate any payments and things. So yeah, I can't comment. I know with my accounting license, I would still have to pay regardless for that annual, period. I haven't seen anything to say that it's going to be reduced or anything. Fortunately, I am still working, but I would take that up with them.
Yeah, I'm not aware of any kind of changes.
Yeah, I don't know if any. Yeah.
Sorry, just going through. I think we've covered a lot of these things as we've gone along. One other question was, do you have a template, a guide for cash flow forecasts that we could use as a template? Now that might be something that Float could help with, I imagine.
Yeah, well, I do actually have a landing page with a template, and it has got a link through to Float as well, because I know some people, I'd rather them have the choice whether they start out with the Excel spreadsheet or go straight into Float. And Sam can tell you more, but Float's actually the COVID-19 offer this month, so it is a really good time to test it out.
Yeah, absolutely. So Float at the moment is free up until May 31st. So you have essentially an extended trial, which would normally be 14 days, but it can be up until May 31st. So you've got quite a fair bit of time more to work out what that looks like. But in Float, but I do completely agree with Ria there. I think one of the key messages we want to get across is, as much as Float is a way or a method of doing cash flow forecasting, as long as you start doing it, that's the main thing. That's the key thing here. I think is the fact that doing cash flow forecasting is the most important thing. And if you're starting out in a spreadsheet, although we did mention some challenges before, if you're starting out, at least you're getting that visibility somehow. That's the important thing here, is doing cash flow forecasting as an activity, and then we can get to sort of move towards potentially something like Float, where it has some advantages over a spreadsheet. But I think if you're starting out, it could even be a nice evolution if you start with this spreadsheet that you have on your website, Ria, and then you move to something like Float after that, once you've got those concepts down that we mentioned.
I can share the link in the comments, Eve, if that's okay. Because it's got a business, it's got 3 downloads, so an income and expense sheet, a business planning tool, and a cash flow forecast as well. So it gets you thinking about all the parts of the business, which is really important right now, because I guess a lot of people are reviewing their business plan as well.
Absolutely. There's one other question over on our Facebook stream, which is asking, so the interest on a loan is an allowable expense regardless of how you use the money in your business. Is that right?
The interest on the loan will go through, so it'll be your bank and credit card and credit interest charges and things. But if you have expenditure which isn't business related, then that's not going to reduce the profit, the taxable profit. because it's not going to be included as an allowable expense. But as far as I know, I'm sure though with the bounce back loans, you have to do a self declaration to say it is going to be used on business expenses. That's one of the terms of the loan. I don't know if there's any restrictions with grants and things like that, or furlough payments, because some people have paid from their own money. But with the loans, definitely read the terms carefully on that, because you don't want to get yourself into trouble by breaking the terms of the loan.
Absolutely. Thank you. Well, I think we are kind of coming up to the end of our time. That's gone super fast, which was surprising. I think as somebody commented quite early on, you guys have made cash flow sound exciting, which is quirky. So thank you. It's been fantastic, and I think I've certainly learned a lot. And I think we've had some great comments as well, just saying thank you so much for the advice, because it's quite hard to find specific advice for the salon market out there, and it's great to have that from you guys. So thank you so much for hosting this with us today.
Thanks for having us, Eve. Thanks for coming on as well, Sam, and helping me.
It's an absolute pleasure. Thank you so much for having me on. I really appreciated it. I think there's one quick comment there from Haley in the chat. Can you use Floating Island? Haley, it depends. If you use, we connected 3 different accounting softwares, so Xero, QuickBooks Online, and Free Agent. So if you do use them, then we will be able to help. But unfortunately, at the moment, if you don't use them, then we won't be able to help. So if you do use one of them, then we can. But yeah, if not, unfortunately, I think a spreadsheet would be the best alternative right now, and potentially the spreadsheet that Ria has on our website. But thank you so much for having me. It's been epic. I thoroughly enjoyed myself. So thanks, guys.
Thank you.
Excellent. Well, thank you both, and thanks everyone for joining.
Stay safe, everyone. Bye-bye.
Bye.
Thanks, guys. See you later. Bye-bye.